Good morning, everybody. Mike here. Saturday, 1st of February, a 12th of the year gone already. Our lesson today, our coaching lesson, is going to be on trade entry ideas. So we're kind of going through a little trade plan sequence. And I'm going to go ahead and get rid of that screen. There we go. All right, this document is still being worked on, so I'll get it dialed up and put on the website one of these days. All right, so your trade plan sequence ends up being, you got to find candidates. You can do the setups, obviously, by looking at any of the workflow recordings. Today, we're going to go over entry ideas. Last week, we went over open trade management using the spreadsheet, which we'll dive into a little bit and get some improvements on it. And then we had an exit ideas session. That's not lesson number 4 up on the website. And next week, we'll go through a really critical part of your trade plan, which is the review process. Can't learn anything unless we review what our behavior was and our results were. So it's important, you get into this mindset of, all right, that trade's over. I made this, I lost this, whatever. That's not when the trade's over. If you really want to get good at this, you'll look back on every trade and ask yourself some questions. But that's next Saturday's session. So today we're just going to look at entry ideas. Now, this really needs to be collaborative. I mean, I can't come up with all the ideas on how everybody wants to enter a trade. It's very personal, just like exits. So open up your mic or type in the chat window, whatever you prefer, but be interactive on this. And I'll just type into the document, the ideas that everybody comes up with. All right. Because it's highly likely that, in fact, it's a certainty that I'm going to miss a lot of ideas here. Okay. All right. So real quickly, this strategy simply identifies what to trade based on 2 leading indicators, either an insider buy or an unusual option. It does not have specific rules for how to trade them. And everybody here has learned trading from somewhere, either self-taught or the online trading academy or wherever. And so you have your own, kind of bias as to how you want to get in and out of trades. But what I wanted to do, because this strategy, again, just identifies what, is to get ideas from everybody. And there is one, Julie's not here. Yeah, well, Julie has done a really good job with this strategy in last year. She had a phenomenal year. And so I asked her when she shared with me how much she did, what her win rate was and what her profits were. I said, would you mind, giving me your process and can I share it with the team? And she said, yes. So I've got that I'll share with you after we go through these ideas. Okay. And it was surprising to me. And that's good. This is how we learn. All right. So 2 leading indicators. Now we got to get into entry ideas. Now, the one thing I do want to make mention of here is that when it comes to UOAs, there's one final check you need to make before you even think about entering the trade. And that is, is that open interest still there the next day? Because, we're looking at and scanning for high volume on a specific day, call it today, and we're going to enter the trade tomorrow because we get that information after the close. Maybe that volume was day traded and it really doesn't create a UOA out there. So just make sure that the first thing you always do before you enter a UOA is confirm that the volume, and it doesn't have to be all of it. It just has to be, the big number of it stayed there on the option. Okay, that's it. All right, so I'm going to go through these and make some comments about each of them, and everybody should chime in. The first one is just enter immediately with no regard for price. That would be, I get an IE or a UOA, the market opens, and go in and buy it. Maybe you get a little better price than the insider or the speculator on the options. Maybe you pay a little more, but you're in immediately. Okay, that's one way to do it. And admittedly, because I am so busy with so many things, that's what I've been doing pretty much. I don't really, take the time to try and optimize my entries. And so, it works. I mean, I'm not unhappy at all with the performance of the portfolio. But it doesn't mean it's the ideal way to go, right? It's just that time management for me is an issue with all that I have going on. All right. Now, I did take a quick look just to give you some idea on the 20 open positions we have for Insider's Edge right now. And I'm just going to bring it over here real quick. Just to get an idea, like what is the adverse move from the open the next day? And if you just take a look at these 20, most of them have some pretty decent moves away. 3, 4, 9%, 6%. A few of them, 1%, 1%, that's 2, 1%, 3, 1%, 4, and 2% now. Just so 4 out of 20 basically went up right away. They didn't give you any kind of an opportunity to get a better price. But that's not a lot. I mean, you think about it, and again, this sample size isn't huge, but I had to have something take a look at to comment about this idea of going in right away. And with 16 out of 20, 16 out of 20, you could have gotten a better price. And you might have, even if you went in the morning, maybe it was dropping down. I've done that with some trades where, I'll have a UOA I want to get into, and I'll look at it in the morning, and I'll see that it's in the pre-market, it's red, and it's dropping, and I'll compare that price to what the speculator got, and I'll say, all right, well, I can get that for 25 cents cheaper right away. I'm just going to take that trade and be done with it, But that's, again, not trying to convince anybody to do it that way, just bringing it up. So there's some empirical evidence, although, again, it isn't a huge sample size. There's some empirical evidence that not buying the open of the next day or right away can get you, in most cases, a better price. Okay. So just out of curiosity, anybody out there entering this way? Or is everybody looking for a different entry style? Kevin doesn't? Okay. Yeah, I'm not trying to find, I'm just curious, that's all. Mostly Helena does? Okay. All right. So anyway, that's one way to look at it. Okay. Now, the other thing you can do is you can simply look at the price that the insider bought or the speculator in the options paid, and just enter a limit order at where they bought. Just give them the credibility that that they deserve and the decision that they made. So that's another way to look at entering and getting that price, right? There we go. I finally got that out of that window. Okay, now I can see all the texts. Me mostly I begin entry right away. Okay, Tim. When I'm thinking entry, I look at a short-term trend. All right, good. Usually immediately. Okay. All right. So a lot of them do that. Anybody doing this? Anybody doing limit orders, just trying to marry up with the insider? Parker tries to get close. Helena says no. Okay. All right. So again, this is just exploratory. Now, you could also, because there are a few of these that went straight up the next day, you could scale in as it moves up. That is like if you've got a position of three options contracts, buy one right away, maybe add to it as it goes up in your direction or down and you can dollar cost average, right? Nancy says sometimes I scale in if I have over two options contracts. All right. So that's a valid entry as well. I guess the most important thing is, are you, you having a specific rule set you're following, or is it more discretionary? Are you kind of just making the decision once in a while to do this or this? That's what we want to get an idea of. Because if we don't have any fixed rules, then it's okay. But I think what you should do is journal that decision at the time, because you'll find out in the review process that the only way to get better is to have some evidence, some data. You've got to have the data before you can start analyzing anything. So, not saying any one of these is better than the other, but whatever you do on that particular trade, journal it. Just say, oh, I went limit in, I went in immediately. This is just another column in your spreadsheet, that you can do. All right. You can wait for a pullback to a better price. Now, you can see that in the case of that small sample of IEs, it was, you got a better price out of 16 out of 20 of them. How much? I don't know. Those percentages, some of them were 10 cents on a $2 stock is 5%. You know what I mean? So like, what are you really saving when we see what we're trying to get? Right. And then of course, if you are waiting for a pullback, how much? What's your decision on when is the pullback come at the time to enter the trade? Because we have to know these things when we go to review. Like if I had used three or four of these and they were discretionary decisions at the time, and I had captured that entry rule in my journal every day, and now I've got almost 300 trades of this strategy. I've got a sample size that's pretty darn good to tell me whether I should be doing that or not. Now, I haven't been because, as I mentioned, I pretty much just go in immediately. But I really love to collect data like this. As you guys that are in my futures room know, we have reams of spreadsheet data on entry, exit, time of day of week, you name it, a lot of different things. And we get to go back and mine that data for edge, right? So this is what I'm going to be doing effectively from trades, all the trades from now on is make a decision, journal it, and start building out that information. So pullbacks is another way to get in. And but again, what are you going to use as the pullback? Is it a dollar amount? Is it, the first red candle? Is it a moving average? Is it a demand zone? Those are all things you need to capture information on. And you can go the other way. You can say, and I've done this a couple of times with IEs where I saw that, they bought right underneath a supply level on the chart. And I thought, let's just watch this. And if it can break out of that supply level, that is a key resistance area, well, then it should have some room to run. And you can use, supply levels. You can look at a couple prior highs on the chart, maybe a double top. You can put some Bollingers up and see if it isn't a breakout of a squeeze. So breakouts of key resistance are another area where you can use it as an entry technique. Now for UOAs, this gets a little bit different. These you can pretty much see are based on chart and price, those first five. Now with UOAs, there is some entry rules that don't have anything to do with price that we've got to consider. And that is, the first one is, do you use the same strike price that was the UOA? Because as we all know, if it works, all the strikes are going to be going up. The cost of the options, if it does indeed go up, all of them go up. So, you could say, all right, they think it's going up. I'd like to get in the money. I'd like to put up more capital to get in the trade to be able to have a higher delta right off the bat. Valid. It kind of flies in the face of the kind of returns you're going to get if you do go out of the money. And then, you could do the same thing at the money. You could pay a little bit more and get a little higher delta, or even slightly out of the money, not as far as the UOA. Because our definition of the UOA is that it has to have a delta of 35 or less. And in fact, the research on this strategy pointed to deltas of 30 or less. I just intentionally gave it a little more wiggle room to get some more candidates. So what do you define that choice as? Are you looking for a specific delta or what? Who here is doing a different strike than the UOA? And how are you figuring it? Anybody want to chime in? Dale's doing generally use same strike as long as there has not been a big move up or down. Yeah, that's what I do. Paul likes to do it closer to the money. Okay. Are you happy with that, Paul? You're putting up a little bit more capital, but you're okay. Good. Good. Yeah, because if you start to couple it with an exit, right? If you think about Paul saying, all right, well, I'm going to go closer to the money. I'll put up a little more. He's got a higher delta. Stock may go up a little bit. It may go up, a couple of strikes. It may not hit the UOA, but you could have a very, a profitable trade there. Maybe you're not going to get the 800, 900% winners unless you hold on, and it really, really does go to that strike. But you could have take more money off the table quicker. Parker saying, I like closer to the money, lost too many times going way out of the money. Yeah, no, I get it. See, my hit rate on this strategy is about 38, 39%, because I've been doing those UOA strikes. There's only been a couple of trades that I looked at and took a little bit closer strike, only because it had a whole lot of open interest there already. And so I just made the assumption that, all right, the UOA was at $14, but the 12.5 strike has got almost as much open interest, and it was already there. I don't know how it got there, whether it was a UOA or not, but so I've done a couple of those, but for the most part, I've just been sticking with the UOA strike, and that, to Parker's point, is a key reason why I'm winning 38 or 39% of my trades instead of 45, 50, or 55, because those way out of the money options don't hit as often, right? Anybody else have a comment on strike? We're seeing that So far, the mix has been same strike, a couple of people going closer to the money. Okay. Be interactive. We can. Paul says, do you use the same delta range for insider trades where there isn't a UOA to follow? No, but I'll show you what I do. Okay. This is this is nothing. They don't worry about what stock it is. I'm just bringing up an options chain. All right. So let's say, just to answer that question, let's say WBD was an IE. It was back a while ago. And let's say it's new today. We just noticed it today. And I don't want to put out $10 a share because it's got liquid options. I'm going to use traditional options buying rules for that. And that would mean I'm really looking for, 75, 90, 120 days. You could even go further than that with IEs because the insiders basically saying they intend on holding the trade for at least 6 months, right? So, I mean, you could go out there to the Junes, clearly the Aprils, but let's say it was the June, all right? So I'd go over here and I'd say, all right, well, I'm going to give this thing to June to happen. And now because this is so low priced, it's pretty cheap and it's got a decent tight spread way out in June even. But I like to see just slightly out of the money where there's high open interest. So this one, you notice the big open interest, the closest one with big open interest is the 12 and a half. And you're getting like 34 deltas, but you're coming in with 40% less capital, which means if you use risk percentages on the trade, it just means you're going to buy more contracts, right? You could go all the way out here to the 15s where the high open interest is sitting. That doesn't mean that they were all bought on the ask like we look at with unusual options, but that's typically what I do. I want to be slightly out of the money where there's high open interest, to Paul's question. Tim's saying I use the same strike also. Okay. All right. So that's a decision you can make, is keep stats on which strike if you're going to try different ones. We want to keep information about this. The next thing is the same expiration, or do you go farther out? I doubt anybody would take a UOA and go closer to present time because most of them don't have a whole lot of time. So I'm just going to make the assumption that you can use the same expiration, or do you go farther out? Any comments on that and how you're doing with it? Anybody want to share? I've been pretty much just following the UOA. Don't maybe on a couple trades I went out beyond like an an, uh, an event like earnings. Like if I had a UOA that was expiring on Friday, next week, Friday the 7th, and their earnings were coming out on the 10th or the 14th or something, I'd go the opposite. I'd push it out, the expiration out till after the earnings, just to try and get that into the mix. Let's see what everybody's saying. Helena, the same almost always. Yeah, unless close to earnings, right, Dale? That's what I do. Paul saying high failure rate when I follow a UOA with less than 60 days. Yeah, well, I mean, I consider my failure rate high. It's just that they're so the ones that win are so good that, it's created a really fat return for me. So I am, that's a personal thing. I am okay with losing 60% of my trades. It doesn't annoy me one bit because I size the position to what I'm writing a check for. I'm saying, hey, look, this is out of the account. Mentally, I don't care. And I want to be that way. I do not ever want to be concerned about losses. It kills your objectivity. It kills your confidence. It gets you emotional. And you're going to start doing things like not taking some trades, or I need to take a break from this. I'm in a losing streak. No, you don't know. You can't control this. You don't know when the winter's coming. So size it such that you can, or use a stop, a mental stop, and get out then. But all right. So anybody else with expiration? No. Got a lot of people here who aren't joining in. What's up? Want to hear from you. Okay. Next thing is you could do some complex options trades to get in the UOAs. Actually, you could do this for any of them. And I'm just giving one example here. There's a lot of different things you can do if you're really schooled in options trading. The way we've done it is the simplest way. You're just buying a call option. That's all you're doing. It's easy. They're liquid. We're not worried about them. And but there's other things, and I know Kevin likes to chime in on this every now and then. And I just bring this up as an idea. If you've got the capital, you can sell some cash secured puts on it, and either leave it as the entry, like you're just going to take that little bit of profit if the stock keeps going up, or you can at the same time take your cash from the secured puts and buy some out of the money calls and get in the trade for free. Yeah, that's his favorite, right? The numbers got to make sense. And if you don't have the capital, you could look at, kind of creating the same thing with a credit spread, you know, where you're selling the near the money put and you're buying one that's out of the money so that you're only keeping a partial of it, because that's all you want, that's all you want to tie up in your account. You don't want to tie up the whole cash position on the stock. And then rolling that money into the calls or not, just keeping the spread. So who's doing any kind of I'll call them complex options trades, anything other than just buying calls, and wants to share how they're doing with that? Okay. All right, so I can see that we're not going to have a lot going on here today with contribution, but if you think of anything, please let me know. I'll type it up. Paul saying I only consider spreads when the price is BM. Yep, I understand. Parker saying, can you quickly review the BFF? Yeah. Kevin, you want to do that? Kevin's good at this.
The last one that comes to memory, and I need to one of my flaws is I don't keep records as I should, and I'm working on it. But the last one was that Funko. I was able to sell, I think it was 1250 puts for $93. And I used that to buy the 20 calls, the farther out ones. I think they were 70. So I actually took it in net credit.
Okay, here's Funko. Do you remember when that was? Was that back in December?
Yeah. Let me see if I should be able to get the order history here
Yeah.
real quick.
The idea behind it, Parker, is in this case, let's say we were at about $12. All right. So $12 a share, 100 shares. So you have to do one contract, you got $1,200 you're tying up in your account by selling a put down here somewhere. Maybe it was the 10, 10 and a half. I don't know. Whatever the money looked good. Basically, when you sell a put, cash secured, you're basically, you're saying, I want to own the stock at that price because you could get assigned at any time. So, now if let's say you got $1.50 or you got 80 cents or whatever, for the put, then you could go out and buy call options at about the same price. And then so while you're in the call option, quote unquote, for free, BFF, you are tying up capital and you may get assigned the stock. Now, as I already mentioned, you could take and make that a credit spread, so you're tying up less of your account. But you're going to be bringing in a lot less premium that way because you're
Yeah,
buying.
here I got it was 12.27.
Okay.
I sold the 12.50 put for $97 and I bought the $20 call for 70 cents.
Okay.
And then I did the same thing in my cash account, like you're talking about with a spread. I sold the 12.50 and I bought the 10. I only got like a $50 credit, but I still only shelled out $20 more for the call.
Right. Okay. So that's exactly what I was talking. Is anybody else doing this? Anybody else trying these BFFs? It depends on, what the price of the options is, whether it's worth doing or not. And do they have the same expiration? Parker's asking. What was the expiration, Kevin?
No, to make it work, I had to sell the February and I bought the May.
Okay. Okay. Good. All right. So we will Kadami, we'll get a little tutorial up on this trade. Kevin will kind of like do a little write-up for us. Not now, but and then we'll post it in WhatsApp. Is that all right, Kevin?
Not a problem.
Super. All right. Okay, so let's go over what Julie, who's had a phenomenal year trading the UOAs and the IEs, right? And I asked her when she told me what she made. I'm not going to go through the numbers with you. Just trust me, they're extremely impressive. This is what she wrote these are her rules. Okay. I don't trade stocks under $20. Some exceptions. Okay. So not quite clear what makes it an exception. Maybe it comes down to this other point here where I don't trade the stocks I don't understand. The fundamentals, what the company's doing, So maybe SoFi, which is a finance stock, she called it an exception. It was trading less than 20, but she understood what SoFi does. Okay. That may be the reason. Don't trade pharma or biotech, since that clinical trial can move the price hugely one way or another. All right. So, this is basically a risk averse rule. However, you're also limiting your gains in a big way, because some of the biggest run-ups we've had have been in biotechs. But again, this is just her rule set. She wants to understand the company and she doesn't want that big move up or down. Tend to do the long dated options due to my schedule, and allows me more time for the trade to work out. So in her case, she's taken the expiration date and moving it way out so that it gives her wiggle room. She's okay with the increased investment of the time, but she likes that. Don't trade stocks I don't understand. Understood. Now, this is a really important one. Okay. I know using these criteria, I miss a lot of trades you took using the UOA list, but it is what it is. I'm trying to balance out my retirement life versus my trading life, right? And I'm 100% okay with it. Do you see why this is so important? The rules you create for your plan, you've got to be comfortable with them. If you're uncomfortable, like in her case, to take short dated options, well, don't do it. I mean, I know what the results of it is, and I've been following this almost completely uh, per buying immediately and the exact strike and expiration. Almost all my trades are just rotely following that, right? Because anything chart related, I've already done to qualify the candidate. Above demand, no supply, or above demand, no strike is below supply, those kind of things. And we do that initially anyway. But I'm okay with it. You see, what I love about this is she makes these rules and she knows she's not getting every big winner that we post on WhatsApp. But what is she saying? I'm fine. I'm happy with my rules and my performance. And so you should be too. If you're feeling uneasy about the trades, then take a look at what's making you uneasy and change it. If it's the dating of the option, well then go further out. If it's the delta's too low on these UOAs, well then come closer to the money. If it's because, like in my case, I don't care if I'm losing 60%, it's working for me. I'm not going to address it, but if you're, like Paul says, surprisingly, he's had too many of those fail. Well, then, you got to change it. You have to change it. The edge is here. There's no question. It's been 20 months of trading this and all kind of ups and downs. Right? I know it's been a bull market, but we've had our challenges. August, then you get days like this week where, tariffs get announced and all of a sudden S&P plunges 1% or 2. So,
Mike,
yeah.
um, when I'm thinking mostly of UOAs. When we get a daily summary, of the results, we might have 20 or 30 different opportunities. And at some point, we look through, figure out based on criteria for um, selection. We still may end up with a half dozen. Are you taking all of those half dozen, or are you still somehow have another sort of a filter that says, well, I'm going to take 3 or, whatever?
Okay, good question. So let me just show you my worksheet here. I always put in color which ones were qualified, right? Light green means maybe, yellow is just monitor. And then when I bold them up like that, I'm taking them. So I don't see any day where I've had 6. I see here's a day with 3, and I took the 2 that I thought were the best, Amgen and Match, right? This one was a little bit, I can't remember why I thought it was not as good as the other 2, right? Here's a day where there was 2 really good ones and a couple. Now, I ended up, this day was an interesting one because NBIS here, this stock gapped way down the next day because of that uh, Chinese what's the new software called, the new chat?
DeepSeek?
DeepSeek, yeah. We found this day on a Saturday. Okay, this was a Friday. We found it on the 25th last week, I think it was, right? Is that what it is? Yeah. And these 2, we were looking at them on Monday, looking to go in on Monday. And what happened? Well, this thing gapped down so much, I blew it off. I said, no, that's 46. Stock was trading at like 30 or some nonsense like that. So I had to cancel that one. And I went in with, actually did both of these. I wanted to get in both of them. They're not doing bad. PDD and EW. EW is actually doing real good. But I don't see days where there's, 6, but I do kind of, look for the ones that in the process I felt were the best and make sure I get in those.
So it's still, it sounds like there's a little bit of subjectiveness in your final filter, so to speak.
Yeah. Well, you got to look at, I mean, we do this together on Saturday, so you can see, like what, like what's the current stock? What's the current chart really down hard on these two, right? That might have set me back a little bit. But you're right. I guess we all have to be comfortable with it. Some days I don't put any on, even if there's a good one, simply because I've got like 30 positions. I got to get in the habit of maybe closing some, but the ones that are losers, there's nothing to close. They're just sitting there. They're going to expire worthless. Can't even get a nickel for them. So, it just looks busy. But now there is one other thing I will tell you, like right here, when you get to these expensive options, like $9, 13, I want to buy multiple contracts, and that means now I'm going to put minimally 20 on a $9 option. I'd have to put minimally $2,700 out in options. And since I size my positions to lose it, I'm not doing that. I don't want to lose 2,700, right? So a lot of times, Dale, I'll kill a trade because it's too expensive. 490. I don't like that either. I don't want to lose $1,500 on a trade. And I don't want to open manage it with a mental stop. 1,500 here. Now, these were not qualified anyway. I'm just pointing to price as an example. Okay. So that's
typically I limit probably to about like 250 per contract.
yeah.
It just like I say, don't want to get too far.
Yeah, I agree. And everybody's going to be different on that, I know Anthony, he manages the risk. He does a bigger position, but he goes in and monitors it with a mental stop. And when the option gets, to about half of what he paid for it, he kills it. If you want to do that, that's perfectly fine. I just don't have the time. I've got too many things going on in life to manage them that way. All right. But I think the big takeaway here from what Julie's doing, which is, they're all fine, she doesn't trade stock, she doesn't understand, that gives her confidence. She likes long dated to give herself more time, that's fine. But the main thing is she is happy with her rules. She doesn't look at what she missed out on and go FOMO or DOMO, disappointment of missing out. She sees it in the web, in the WhatsApp, and she says, so what? I'm doing it this way and I'm okay with it. 100% okay with it. That's where you need to be. All right. All right. Anybody else have any concepts or ideas on entry that you want to share? And don't see anything. All right. Put it in your plan. What are you going to do? When you do something else, journal it. That's my best advice. I'm not saying that one of these is better than the other. Whatever you're doing, make sure you journal it, and when you do something different, you know what it is, because it won't take long. I wish I did it. I'd have a sample size of almost 300 now, and that's pretty good. So anyway, that's where it's at. Okay. No other comments on this. I'm going to wrap up this session, take like a 2-minute water break, and I'll be back, and we're going to pick some opportunities for Monday. Okay. Hold on a second. Let's not do that. Let's bring up the Excel spreadsheet. We'll keep it in this lesson because it's part of.
That's what I was hoping you'd say.
Yeah. We're going to do that. We're going to bring up the downloadable. Here we go. All right. Now, again, I didn't change this. It's just, these are just a few trades I plugged in for demo purposes.
Right.
But this is, let me just make it.
That's too small.
Yeah, I know. All right. Well, we'll just scroll back and forth on it. That's all.
Right. Well, that's actually addresses the first topic, which is that freeze pane business.
Okay.
Okay. So you have the top row frozen right now, right?
Yeah.
Okay. So under view, freeze pane, you have to unfreeze the
Okay.
pane.
Unfroze it.
Then you go to the cell that is the first cell that would move. This is counterintuitive.
Okay.
So you would pick the cell E2.
E2.
E2, Edward 2.
Okay.
That's the one you want to freeze because it's counterintuitive. Is the one that's going to move, and everything else, either to the left of it or above it, is not going to move.
Oh, okay. So I'm going to have my here is going to be good, and then this will all stay.
Right. Now you go back to freeze pane, and you just say, pick the top one. Yeah, freeze pane. Now it's frozen in both vertically and horizontally.
Oh, baby. Perfect. Yeah, somebody tried to explain that in the last session, but I didn't get it. All right, good.
Right. Okay.
Everybody sees that. If you want to, whatever you want to see stuck here, put it on the next one. Like if you wanted to see strategy, you would,
Right. It's sort of counterintuitive. You want to select the one you don't want to freeze to be the freeze pane.
Okay. All right, good. Was there anything else on it you did?
Yes.
Okay, let's do it.
Okay. Your sorting is the idea of sorting is not, I don't think you want to sort. You actually want to filter. Okay.
Okay.
And so under data, there's a filter thing that's a funnel. Now don't touch it yet. Okay. Okay. It doesn't matter. Okay. So what we're going to do, let's start all the way over to the right for the last T column of, let's see, we want it to be AA. So AA, select that one, and then
the whole column,
the
cell, or
select the cell below.
right there.
No, there you go.
Okay.
Okay, now your summation is up to 300 rows, correct?
Yes.
Okay, go to row 300 and column 1 or column A and do it shift select.
300 column A.
Shift select. Okay, so I've selected everything that we want to filter. Now go to that filter above. There you go, and just click that. Okay, now you have everything that you can just click anywhere. Okay. Now you wanted to look at only open. So scroll back to the left to get to the open column, the status column. Okay, now pick where, let's see, pick the status column. There's a little drop down arrow on the status column.
Yeah.
Okay, pick that. And now select, deselect, unselect, closed, and you can leave blank. It doesn't matter about blank. No, leave open, open. You want open selected. Just the only, yeah, there you go. Now say okay. Now you have just the open orders.
Ah,
You're not having to resort everything around, okay?
right.
Okay, and you can save this. You don't have to worry about losing anything because all you do is go back to that strategy or I'm sorry, the status, not I'm sorry, status one.
Status one, right.
You go back there and just say select all, and it just brings them all back up. Okay, or you can say, well, look at only want to look at the closed ones.
Oh, that's
So
beautiful.
that I think is better than the idea of sorting to get all the open at the top and all that kind of business because you haven't changed the order of anything now at this point. All you've done is said, I only want to see the ones that say open or whatever criteria you've chosen.
Right. Okay.
Okay.
That's perfect.
Okay. Oh, I'm sorry. One more thing I wanted you to do is back down on line 300. Okay, right on line 300 in column one, for column A, type in insert new lines above this row. Just type that right in that cell. Okay, now insert a couple of lines above that row. Now, if we go to your summary at the top of the column, and you'll see that it increased the number from 300 to 304 or two, or
Oh,
whatever,
yeah.
what it get you? 302, you put in two more lines.
Right.
So it automatically updates your formulas so that when they get down there and you say, okay, I'm at number 290 or whatever, I need to add more rows, it because you did the insert within the range of that summation,
Uh-huh.
you have actually increased the range of that summation.
Got it.
So you don't ever have to worry about all you have to do is, well, I'm getting close to this bottom row, add another 50 or 10 or whatever you want to put in there.
Right. So I can go here to 301, go like this, go insert rows, and that should go all the way to 07 now. 08, yeah, right. Very good. Nice little trick.
Right. Right.
I mean,
Okay.
Matt, as long as I've been using Excel, I still don't know 90% of what it can do. I know
Right.
this is a
I
really,
understand. I don't know it all either. I just know some of these things.
yeah, no, that's a
Okay, when you
perfect
when
color.
you talked about adding a T4, you have to also notice that you have to update your formulas in columns A, B to the right. Okay, because you're adding a new summation. So from A, B over to the right, you're going to have to update those columns. And there's no way of automatically doing that. If you
Well, if I insert something here, won't those change?
no, if you said like let's say you wanted to take T3 and copy that and insert it as to be T4.
Right.
Okay. It will not add the T3 column, or I'm sorry, the new T4 column entries
Mm-hmm.
to that summation because that summation is just simply from here, here, and here. Okay. And it's not going to know that. So you're going to have to update the A, B to column to the right by
Right.
hand.
I gotcha.
Okay.
All right. Well,
Um,
I mean, I can just do this, not right now, but I can adjust it and put it up on the website, if everybody wants 4 or 5, let me know. What should it be?
Right. Well, the problem is if people have started using this, they basically have to duplicate what your work is because you can't just simply, um, well, I guess they could copy, I guess they could copy
Yeah,
their data out. Yeah, that's
yeah,
right. Because the data, yes, they could just simply copy the data.
yeah.
Okay.
You guys want me to make it 4? What's up? 4, 5? 5 targets, Alex. All right, I'll make it 5. I don't think we need more than that.
Yes, yeah. So Helen, Helena had a question there.
Can you use the filter function to pull up all the trades for a particular symbol?
Exactly.
Yeah, well, you
Exactly.
just go here,
Right.
right?
You just deselect all, and then just say which one of those do you want, and it would show you all the PLTR.
Yeah. Now, you know, when I load this new template up, nobody has to do what we just did. It's going to be there for you folks.
Right, but if people, yeah, exactly. If they want to just take if they've already modified the spreadsheet, at least this way they could walk through these steps and do it themselves.
Yeah.
If they did some other changes to the spreadsheet.
Okay. All
Okay.
right. So we get that's some good stuff.
One last thing, and if you like this, save it because I want to show you something else you may not like. And you can always just throw it away by just not saving these changes.
It's saved. Now,
Okay.
this is, let me turn off autosave because then that'll screw us up maybe.
Oh yeah, yes, for sure.
All right.
Okay, insert 2 rows above row 1. Okay. Now for the moment, we are going to, let's see, let's scroll all the way to the right and grab um, AB to the end. The wins, that column to the end, to the GL. Select all of that. Okay. And paste it in column 1A or A1, whichever way that works. No, A1, right at the very first cell.
Okay.
Okay. Now, let's see, there's how many? 1, 2, 3, 4. Oh, scroll to the left, back to the left now, all the way to the left. Momentarily, for the moment, we are going to reset the frozen cell to
Right.
right there. Yeah, yeah, right there.
All right. So we go first things first.
Just reselect.
We go unfreeze, right?
Yep, yep,
And then I go to
right there. Yep,
strike.
and say freeze. Okay, now you can scroll to the right and look at those formulas. Okay, so now, unfortunately, there's nope, you can't.
Can't cut and paste.
No, because it's going to reference cells that don't exist. So this is where you just select that cell has 4 in it. Okay.
Hold on a second. I could do a paste special, can't I?
Mm,
Formulas and
no, it doesn't work.
well, I'll tell you, I've been doing this like when I do this, right?
Okay, try it.
I'm gonna do this, and I go down here, and it still gives me the same information. It's
Yes, because it's the same column. Okay.
okay, hold on.
Go
Let's go
go put
here.
it over in cell A2, right at the very left. Take very far. Yeah, copy that, put it in an A2. See, those numbers are, let me look here a minute. How did you paste? I'm sorry. Those are actual values now, right? There's no, oh, there's a formula there?
Yeah. Yeah,
Hmm.
I didn't copy, I cut.
Oh,
When you cut and paste, it saves the formulas.
okay. Very good. Very good. Okay. I forgot about that. So now you've got your formulas right up at the top, or you got your summation right at the top. You don't have to have all that stuff off to the right-hand side. Okay, now you reset your frozen cell back to E4.
Okay. Let me just make sure. Give it some view, free cells, unfreeze panes. E4
Yep,
gives me that.
there you go.
And
Now when you scroll to the left or right, it's gonna those few columns there are gonna disappear, but that's not gonna be any big deal.
mhm,
Anyway, that if you like that, that's fine. If you don't like it, you can discard what we just did.
that's all right. We'll put auto save back on, save it, and we're good to go, right?
We're good to go. I think that was covered everything I was thinking about.
Okay. Thank you, Dale. And if anybody else has any ideas, chime in or
Oh,
send.
Mike, you might under average change that from accounting to just a dollar because you got that dollar sign way off to the left there.
Oh, this
Oh,
one? Yeah.
so just do a right mouse on that cell and say format cell. Done. A little bit further down. Oop, too far.
Format cell.
Format cell, go to currency and pick the bottom line, red one. There you go. Okay, now do a right mouse on that same cell and get the no, that one there. Get the paintbrush. It's right there. Apply it to the next average. Just
This one.
click there. Just click there. Okay, do it again. Paintbrush. Right mouse on the no, I'm sorry, you gotta reselect. Paintbrush. There you go. And then the last column. There you go. Now you got it.
Okay.
That's it. I'm done.
That's all good stuff. All right. Yeah, this column here can be as wide as you want it because if you got, if you want to talk to if the action you're taking today when on something is, needs to be more than just this, you can adjust it. I just had it like that. Okay.
Yeah. Oh, one last thing is the top row, I right adjusted that top row so that it lines up with the columns of the numbers.
Like
Yeah,
that.
yeah. There you go.
What's going on here? We
What?
got some kind of
That's your freeze pane.
oh, okay.
Scroll right, you'll see that line doesn't move because that's the edge of your frozen pane.
Gotcha. All right. Cheryl, okay, good. Yeah. Yeah, I didn't think about the filtering either. So I didn't even know about it. I've seen spreadsheets with this, but I didn't know how to do it. Okay, we are good to go. All right, I'm going to sign off on the lesson here and we're going to take a 2-minute water break and then come back and find some candidates for Monday. All right.